to a new listing and a new company that is listed on the show on the in bourses today. That is maize-based specialty product producer Sanstar, which has seen a good listing on the street, gains of about 14% from its issue price. We have Shreyans Choudhary, who is the joint managing director of the company, who is joining us now to discuss about the company's post-listing strategy. Mr. Choudhary, good morning. Thank you for joining in. Firstly, congratulations on the listing today. It's a big day for your company. But I'd like to start off by asking you, what's the moat now that you have compared to your competitors now? And can you continue your current growth momentum going forward as well into FY25?
Yeah, first of all, thank you very much. Indeed, it's a momentous day for us, and this is just the start of a new journey. So the company has grown in terms of top line at almost 50% CAGR over the last 3 financial years. Going into the expansion where the company is doubling the capacity, and that the works are already ongoing and we are well slated. So we hope to maintain the same top line growth over the next 3 financial years as well. The demand for maize-based specialty products and the plant-based products in general is robust, both domestic as well as exports, and we see good growth momentum going ahead.
Okay, hi Shreyans. Congratulations first on a solid listing. As we speak, the stock is at the high point of the day. So good on you. Now let's get to a couple of numbers. You're sounding optimistic about growth and about momentum. You've raised some of this money and you're going to be adding capacity, doubling your capacity to Dhule facility. Could you tell us, when does this capacity come on stream? Point number 1. And at optimal levels, including this capacity, what is the peak revenue potential for the company?
So with the historical experience of the promoters in terms of execution of projects timely that we've both done at the Kutch as well as the Dhule plant. So the works are already going. We are very optimistic that we will complete the expansions before June 2025. And going here, so because the capacities are doubling, we anticipate a similar jump in top line on FY25-26 numbers. At least we anticipate 70% of the capacity to kick in FY25-26 numbers.
Okay, so get to a couple of numbers then. You did around 1,100 crores last year of revenues. Now with this capacity coming on stream in June 2025, what is your revenue potential? Give us the revenue potential first, and then we'll get to the guidance for FY25 and FY26.
So, because majority of the expansion is also happening on the derivatives, the second generation value-added products, so we anticipate better EBITDA expansion as well going on. But just to speak on the top line, as I said, 70% of the revenue of the new incremental capacity we anticipate in 25-26. So if we were around 1,100 crores of top line in FY24, a number of, because these are higher value added products that we are making with a better revenue potential. So a revenue of 2,000 to 2,400 crores could be a possibility on FY25-26 numbers.
What about margins then, Shreyas? You did around 9.2% in FY24. Correct me if I'm wrong here. What are the factors that led to this margin improvement compared to FY23, A? And then B, do you see that scaling into double digits this financial year or maybe say in the next one?
So, because I'll enlist 3 levers that will be contributing to the margin growth. One would be that what I mentioned is the majority of the products coming in on the second generation derivatives and the higher value added mix. Some of the products which we are making on the expansion are also raw materials for pharmaceutical industries. Second point, of course, is the renewable investments that the company has done recently. We have already commissioned very recently the 3.5 megawatt solar farm at the Dhule plant. We have also on the process of commissioning the 1.5 megawatt biogas based electricity. And the third is the sheer scale of size. So at 1750 tons per day post expansion, the Dhule plant will be the single largest plant in India. So all 3 these factors on a cumulative basis are anticipated to aid on EBITDA expansion going ahead. And the demand is robust. Our majority of the product revenue comes in from sales to food, personal care. And going ahead, we are also anticipating growth on sales to pharmaceutical industries. We clocked almost 400 crores worth of exports in FY24. The export demand is robust. Sanstar has a very good footing for its brand now in the overall export markets as well. So all these factors cumulative will aid to EBITDA expansion and margin expansion, of course, going ahead. We hope to be in the double-digit territory, and the general range that we are targeting is between 10 to 16%.
10 to 16%, that's a very wide range. Shreyans, we can't let you go at that. Give us a narrower range. 10 to 16%, the 60% deviation of there. So you go to double digits in this year, FY25 itself. You're already at more than 9%. So by the end of FY25, you'll be more than 10%?
So I've given you a range because of I mean the second generation derivatives will all be coming in by June 2025, and so it's a cumulative factors which I've enlisted. So over the next 3 years we anticipate to be within this range. The demand is good, the market is robust, and because of the capacity enhancements, we anticipate these numbers to start flowing in.
Can we take it from 10% moving towards 16%? Can we take it as that with a 3-4 year time horizon?
Yeah,
by your mix?
That would be a better positioning. So that would be a more realistic view assessment.
We appreciate you joining in, Shreyans. Thanks a lot for joining in. As you said, the facility comes on stream next year. FY26, you can do revenues of 2,000 to 2,400 crores, and margins will be in that vicinity from around 10%, gradually moving to around 16% in the next 3 years or so. Well, time to slip in a short break. On the other side, we'll be joined by the management of Welspun Living. Ms. Goenka will be joining in. Don't go anywhere.